I need to invest more money into my stocks and shares ISA before the end of the tax year. Let's invest with me. The first stock is Amazon. This is a company that I already have in my portfolio, but I want more. Amazon is a fantastic opportunity right now. They're currently down by about 50% from their all-time highs. And in my opinion, I don't really see them staying at this current price for too long. If we have a look on Seeking Alpha, by the way, I'll leave a link in the description if you're interested in checking out Seeking Alpha. It's what I use for all of my stock analysis. And we go over to the financial sector here. What I want to point out here about Amazon is that they have been growing their revenue every single year. And if you just take a snapshot here, 2015, 107 billion. Then you compare that to 2022, which in the grand scheme of a business isn't that long. They have seen a crazy revenue growth here. 2022 reporting numbers of $513 billion. So they are well on their way to becoming a $1 trillion revenue company. Perhaps in the next decade, who knows, but that is an insane revenue growth there. Another thing that I like to look at is the gross profit of a company, and you can see a similar picture here. Amazon are increasing their gross profit year on year on year. But perhaps more importantly than gross profit is the net income. So how much of the money that they're making are they actually keeping? So what is the money that they're keeping after their expenses are minused from that amount? And we can look at that by net income. The picture that we can see here in net income is a very similar one. They are increasing their net income every year, which is a really good sign for an investor. What you will notice is there was quite a bad net income year in 2022. However, I think there are some really clear factors as to why that happened. So they didn't do well in 2022. We know that. The numbers don't lie. And it was about 108% decline from 2021, which is pretty poor. And if a business was doing that every single time, they would soon go bankrupt, and for sure, investors would not be piling money into them. The first reason that Amazon had such a decline on their net income in 2022 was because of the loss of the investment that they had in Rivian. I won't say much more about this one. I personally prefer Tesla, but yeah, they lost a lot of money here. Secondly, it's just been a very high inflationary environment, and a lot of tech companies and other companies have really suffered with that. Amazon being no different. The third thing to say is that Amazon, along with a lot of other tech companies, have been laying off large amounts of staff. Thousands upon thousands, in fact. And this will definitely help Amazon keep more money back in the future. The short-term effect of that is severance packages, paying these members of staff in order to lay them off. And that's definitely impacted them here. Now, all of these factors are very standalone factors. They're not really things that are going to happen every single quarter and every single year. So I'm not too concerned about this. I think these things have caused, obviously, the net income to reduce, and that has probably had a knock-on effect on the stock price. But as a long-term investor, I see an opportunity here in Amazon, and I'm going to sweep up some more shares. And just whilst I'm on Seeking Alpha, another thing that you can do is you can look at ratings from analysts and experts to see if they think that Amazon stock or any other stock on here is a strong buy right now. On this tab, they are rating it a strong buy. On the SA analysts rating, a buy. And then on the Wall Street analyst rating, a strong buy. Not that I'm going to make my investment decisions based on that, but it's always interesting to see what the experts are saying. Amazon is a company that I already have, so let's just buy more. And I'm going to buy £176 worth of Amazon stock today. So let's review that order. It's going to cost me 26p in FX fees. Commission is going to be free. That all looks good. Total 176, and I'm getting 175.74 pence worth of Amazon. So let's send that order now. Okay, I've just noticed it says pending order, so we'll check back in a bit to see if that's gone through. But let's move on to the second stock I'm buying, Palantir. Now, Palantir is quite a confusing company for quite a lot of people, so I do plan to talk about them way more on this channel. So do let me know if you're interested in that. Why am I buying more Palantir today? Simply because I think they're currently at a very good price. We can see that right now the price is $8.36. That's in dollars, of course, but that is very low. If you look at their all-time highs up here, it's about 78% reduction from their all-time highs. Do I think they're going to get back up to their all-time highs or even higher? Yes, otherwise I wouldn't be investing into them. but that's obviously just my opinion. It's not financial advice. Now, one reason why I think this company is particularly geared towards growth is because there is a lot of noise around AI right now. And I think this is prompting companies and businesses to start thinking about how they can use AI to actually make their business more effective and more efficient. And I believe this will gear them towards Palantir and how Palantir can help them actually utilize their data better for their business. Also, if you don't know anything about Palantir, they are becoming more profitable and their margins are absolutely insane given what type of business they are. Their total addressable market is potentially ginormous, but they've only knocked in to such a small percentage of that so far. So there is loads of opportunity for them in terms of the commercial side and the government side of the company. I don't think there's too much competition out there for Palantir right now. They're kind of paving their own path. And that's really, really exciting to me. So the amount that I'm investing today is £100, and that's going to get me just shy of 15 shares. Let's review that order, just make sure everything makes sense. Yep, FX fee 15 pence, what I was expecting. So we can absolutely send that buy order off now. I will never get bored of doing that. It's so exciting. But let's move on to the third stock I'm buying, and that is Unilever. This is a UK consumer goods company for those of you who don't know, and it's one that I strongly believe in. I think this is such a powerful company. They have so many known and loved brands, and their customer loyalty is insane. So I want to pick up some more of this company today. I saw this news come out today and it's just made me more excited about this company, and that is that Unilever goes cloud only with one of the largest cloud migrations. So they've been helped by these massive companies including Microsoft, and they've completed one of the largest and most complex cloud migrations in the whole of the consumer goods industry. That is amazing. They're really getting with the times here, and I love to see it. I won't read out this whole article to you. I'll try and remember to leave it in the description below if you're interested. But this is going to have a massive impact on Unilever, and it's only going to be positive in my opinion. Unlocking new innovation opportunities. They are also accelerating the ability to identify trends and make decisions faster, embracing the latest in AI to drive better experiences, and reducing their carbon footprint. If you're a Unilever investor or you want to know more, go and read this whole article, but it's super exciting. And another piece of news that I read today about Unilever, they are boosting their sustainability credentials with their brands Radox and Dove. And I think this is going to be a pretty big deal because lots of people are caring more and more about where their products are coming from and more about how their products are impacting their environment. And Unilever are recognizing that and playing up to that. They're doing what they need to do in order to continue selling these products to the mass market. And this article basically goes through that. It talks about how Radox new shower gel bottles are made from 50% recycled plastic, blah blah blah, and how they're backing their marketing campaigns on these with a lot of money. You can see that here. But yeah, I think what this is saying is that they are seeing trends in the market and they are aligning their business and their products with those trends that they're seeing. Let's buy £100 worth of Unilever today. And that's going to get me 2.3 shares. London Stock Exchange is closed now. I'm a little bit too late in the day for that, but it will go through when it's open tomorrow morning, and that's okay with me. You can see here we've got a stamp duty reserve tax, the commission's free. I'm getting 2.354 shares to be specific. So let's send that order now. So we're really trying to use as much of the £20,000 tax-free ISA that I have before it ticks over to the new tax year. I have about £700 left of what I've deposited in ready to invest. Make your guesses as to where I'm going to put this money, but for those of you who are familiar with this channel, you're not going to be surprised by this. I am buying more Tesla. Now, I know that this is already a very large amount of my entire portfolio. It's overweighted towards Tesla for sure. And I could take the approach that I want to rebalance and I want to buy other things. So I bring the amount I have in Tesla down, but I'm not interested in doing that. I see this as a very good opportunity right now. And I'm not going to purposely hold off on doing that just so I can rebalance my portfolio. If I'm overweighted in this stock for a while, I don't mind. I'll either rebalance that later or I won't. I don't know. We'll see what happens. So why do I think Tesla is a particularly good stock right now? Well, they've just released their Q1 report on deliveries, and they hit a record for production and delivery. Over 440,000 vehicles were produced. They seem to be growing their production and their delivery quarter over quarter, whereas all the other EV auto market just seem to be doing the complete opposite. So for me, it's a no-brainer. But for me, it's not just about Tesla as an EV company. They have so many other things going for them that I believe will be the future of this company, and the EV portion of it will become smaller and smaller as time goes on. They are doing so many other things, changing so many other industries. You can see here, look, there's absolutely loads going on for them. And for that reason, I think this company is going to be absolutely massive. They already are, but I think they're only going to get bigger. Going back to their Q1 report about their deliveries and their production, something else to be said here is they are still ramping up factories. And you'd expect that this report would come out and the share price might go up because people start thinking, okay, they are growing every single quarter. They are doing this, they are doing that, they're doing big things. Let's invest into this company. But actually, it had the opposite effect on the share price. And I think once they released it, the share price went down by like 6% or something. So it seems like the talk around them cutting costs of cars is becoming a bit of an issue. People are thinking, okay, that means the margins are going down, they're going to earn less money, they're having to do this because of competition. All of this theory, in my opinion, the main thing is they can reduce costs of their cars, and I think that's so powerful. What is that saying about them as a company, that they're actually able to do that? And people are forgetting that Tesla's big mission from the start has been that they want to make EVs affordable to the general consumer. That's been their big idea from the beginning. So of course they're going to cut costs. It's literally what they set out to do. So I'm going to put £700 into this company. I do want to get this up to 20 shares. I'm currently on 15.7 and I'm going to get an additional 4.54 today. So let's review that order. There you go. The FX fee is slightly more just because I'm buying more and it's done as a percentage, I believe. But yeah, that's not too bad. I'm happy with that. So let's send the buy order now. I'm just going to check if the other orders have gone through. So let's have a look. Amazon has gone through. Yep. So now I've got 6.49 shares. Palantir has gone through. I've now ticked over 100 shares and I'm sitting at 108. Unilever, like I said, won't go through. But look at this. Tesla, I now have over 20 shares of this company. So I'm so excited about that. And that means that I am ending this tax year having utilized 30% of my ISA. I'm going to make a video about that soon, but I'm pretty happy with that. My current account value here, I've only got 23p left. That's okay. I will leave a link for Trading 212 in the description below. Use that link, you'll get a free share, I get a free share. It's a win-win situation. I'm really enjoying Trading 212 so far, so check it out if you're interested. Thanks for watching and I'll see you next time.